Hey guys, good morning. This is Anil. So I'm a realtor and a financial pro. So as we all see in the market, this big bank, Silicon Bank, collapsed yesterday, and all the news is talking about this. Silicon Bank collapses and failure. Why Silicon Bank collapse? All these geeky people are now coming up and giving their tips. The question is, what about people like us? When we are investing our money, we are working. Look at this guy. The Peter tells is I think it should be F. Instead of L. Founders Fund got its cash out of Silicon Valley before it shut down. So how come this guy knew about something the people like us don't know? So unfortunately, just to recap, like long ago, I used to work for Aeropostal, an affiliate company, and I had heavily invested my money in Aeropostal. But 2012, the stock from 49 all the way gone down to zero, and it became like of no value, and they removed it from New York Stock Exchange. So imagine you had your all bucks lined up in a 401k, and your 401k is basically locked till 40 years or till you retire at the age of 60. So knowing this, if you are putting money in a 401k, most of people don't know 401k is basically a tax deferred plan. Your money is locked, you cannot take it out. If you take out, you have to pay penalty. So I would like you look at this guy. Okay, he's let share something. So he's Marty Levy. He's the president and founder of Corporate Strategies. He was the ex CEO of Pimco Index. Now this guy is talking about that using index universal life insurance to create more tax-free income. He's talking this article he wrote in January 18 2022, and he's asking, like, would you believe that happiest place on earth, like Mickey, Minnie, Donald, Goofy, they all exist on because of life insurance? Animator Walt Disney needed a bank loan or finance his dreams of opening a theme park. So you can read this article. I will post a link. But this article talks about how the big companies like this Walt Disney and all these big McDonald's, they all have banked their money in a life insurance. So knowing these big companies, when they are putting the money in an index universal life insurance, this is written here, IUL. Why come people like us do it? So this is a problem because the marketing media, because index universal life insurance product, I will just show you, like, this product basically protect your index like this. So this is a red line is a S&P index. Okay, this is all the way to 2016. So the market is going up and down. Imagine you money is locked in a 401k, and that how your stock is going, or you put your directly in the stock market. Now when it collapses, you lose your money. I don't know if you know, but when you there is short gain, long term gain, you have to pay taxes, and on top of it, when your money go down, that's the money you lost. You can only carry $3,000, like, as a loss, but if you gain money, you have to pay taxes. Correct? Now imagine on the other end, this green line, which is like a index universal life insurance. So the zero is zero. Like when the market go down, your money locked at zero. When the market go up, you go. But the only thing is that this index have a cap. So I have this AIG policy which I just drafted for a client for 35 years. So in this policy, the client is putting, let's say, after tax, like this much money every year. So total money he paid on an average is 217,000. Okay, this money is flexible. You can ask me, I can go over, but based on an index strategy of zero as a hero, and then the growth of 11.75 on an average. So he has at the age of 65, not 65, let's say at the age of 60, $600,000. So he invested 212 something. His income grown to 605, and every year he can take out $60,000. He has a death benefit, and then on top of it, this policy gives you chronic critical terminal coverage. So let me show you how this index works. Hold on, okay? So I'm gonna be quick. So this is how it works. So this is S&P index. So as AIG is giving 11.75 total. So when the market was 26, your cap is 11.7. When the market is 8, you got 8. 3, you got 3. But the beauty is when the market is negative, minus 38, you got 0. So the 0 is 0. You never lose money. When minus 73 is 0. But right now the market is going down since 2021, 19. It's like 0. So on an average, the rate interest of past 20 years 7.57. But using AG49, we made a illustration using a 7%, and that how your money is locked. You never lose money. You get a tax-free return because you can take out. So $60,000 client is taking out every year, tax-free all the way up to 100. So he has a death benefit. He has a chronic critical terminal coverage. He has a option to take out money every time, and he's not losing money. So with that kind of product available, if big banks are doing it, why can't we people like us do it? Okay. So let me know if anyone has any questions. My name is Anil Agarwal. My number is in the bio, 732-877-8585. Take care, guys. Bye bye.